What would cause Bitcoin to reach a staggering $10 million per coin? In a recent episode of the TFTC podcast, Preston Pysh, a renowned financial analyst and early Bitcoin investor who co-founded one of the largest investment education platforms, shared his insights on this exact question. What he revealed about the government bond market crisis and Bitcoin's role in solving it might surprise you. Today we're diving into 3 key factors that could drive Bitcoin to these astronomical levels revealed through Preston's analysis of the global financial markets. From his experience managing billions in assets and studying monetary policy, Preston brings a unique perspective on how traditional finance is starting to view Bitcoin. As someone who has interviewed central bankers and hedge fund managers about Bitcoin since 2015, his understanding of both traditional finance and Bitcoin gives him a rare insight into what's really happening behind the scenes. And while a $10 million Bitcoin price target might sound outrageous, by the end of this video, you'll understand exactly how the current problems in the government bond market could create the perfect storm for such a move. Before we get into it, if you enjoy this type of content, hit the like button and subscribe to stay updated with the latest from the TFTC podcast. You can find the full episode in the description. Now, it's important to know that Preston is responding to a discussion about the struggling government bond market. He's about to explain a potential solution that could change everything, using Bitcoin to back these bonds. Let's hear his breakdown of exactly how this would work.
So based on that math, you need 0.5% of backing of whatever garbage debt you're buying. You need 0.5% of it backed by Bitcoin just to break even in buying power terms of the bonds value. So if you have, you got $1 million worth of 30-year debt, you need 5,000. Is this math right? You need $5,000 worth of Bitcoin inside of that to basically protect the buying power of the $1 million inside of the bond. So if you're saying that, so where I'm going with this, so if you're Paulo and you're saying, oh yeah, the government's coming to me, they want me to start buying long duration bonds, 30-year bonds, and it needs to have 0.5% of backing in there. What you're really, the risk that you're taking on if you're him is that terminal value of where you think it's going to end up.
When discussing trillion-dollar markets, small changes can have massive implications. What Preston is describing here is groundbreaking. He's explaining how just a tiny fraction of Bitcoin, about 0.5%, could be used to protect massive government bonds from losing value. Think about this. If massive financial institutions started requiring even this small amount of Bitcoin backing, the demand would be enormous. For perspective, the U.S. government bond market alone is over $24 trillion. Now imagine what happens to Bitcoin's price when institutions start competing for that small fraction of backing. This becomes even more significant when you consider that bonds are just one part of the global financial system that could benefit from Bitcoin backing. The real breakthrough here is how this small percentage could solve the current crisis in the bond market, where investors are increasingly unwilling to buy long-term government debt. By adding Bitcoin as backing, these otherwise unattractive bonds could become desirable again, creating a new source of massive demand for Bitcoin. This isn't just theory. It's a practical solution to a real problem that's keeping Treasury officials awake at night. But this potential bond market solution is just part of the story. Next, Preston explains how this ties into Bitcoin's long-term value proposition.
What this comes down to is, what do you think the terminal rate of Bitcoin's buying power is going to be on the other side of hyper-Bitcoinization? Okay, because until you actually know what that, have a really sound understanding of what that number is, it's so much risk because you either don't have enough or you have an overcapitalized, I don't know if that's the right word, you basically become a massive beneficiary because you underestimated how valuable it became. So here's what I mean by that. For me, when I think about the value of Bitcoin when it takes over, the way we understand $5 to $10 million today is basically one Bitcoin. In my humble opinion, we're somewhere in that ballpark. Okay, it could be 20, it could be 1. I don't know. I don't think it's 1.
Now we're getting to the heart of why Bitcoin could reach $10 million. Preston isn't just throwing out random numbers. He's thinking about what happens when Bitcoin becomes the global standard for preserving wealth. The $5 to $10 million price target he mentions isn't based on speculation, but on Bitcoin's potential role in the entire financial system. This makes perfect sense when you consider that Bitcoin's fixed supply of 21 million coins would need to absorb trillions of dollars of value from bonds, real estate, and gold. The key insight here is that as traditional financial markets become more unstable, Bitcoin's role as a store of value becomes more critical, driving significant price appreciation. What's particularly fascinating is how Preston ties this back to the current global financial situation. When you look at the instability in currency markets, the problems with government debt, and the growing distrust in traditional financial instruments, Bitcoin's potential value becomes clearer. This isn't just about speculation or getting rich quick. It's about a fundamental reorganization of how we store and transmit value in the global economy. Think about it. If even a small percentage of the world's wealth seeks protection in Bitcoin, the price implications would be staggering due to its fixed supply. And as Preston is about to reveal in our next clip, we're already seeing signs that major financial players are beginning to understand this dynamic.
I think people that control a lot of buying power in the world have finally figured this out. And I think that they're doing everything that they can to take a position size. Now, whether it's a large position size or what, or just a hedge, I don't know, but they're figuring it out. Just look at the people that came to the conference in Nashville. Like, they're figuring it out. So hang on, because you can only mask things for so long, especially when the entire blockchain of Bitcoin is auditable. You can see how many coins there are. You can see the public addresses, and hang on. I think it's going to be really exciting.
This final segment reveals perhaps the most bullish signal yet. The smart money is already moving in. Preston's observation about the changing attendance at Bitcoin conferences is particularly telling. We're not just seeing curious onlookers anymore. We're seeing serious players from major financial institutions who understand the math behind what Preston is describing. The transparency of Bitcoin's blockchain means we can actually verify this movement. Large wallets are accumulating, and institutional adoption is accelerating. This isn't just speculation. It's a fundamental shift in how the financial world views Bitcoin's role in the global economy. What makes this especially significant is the timing. These players are moving in while most of the public still doesn't understand Bitcoin's potential role in the financial system. The ability to audit Bitcoin's blockchain in real time gives us unprecedented visibility into this shift. We can see major accumulation happening, even as many traditional financial commentators remain skeptical. This transparent accumulation, combined with the increasing presence of institutional players at industry events, suggests we're at the beginning of a major shift in how the financial world views and values Bitcoin. The smart money isn't waiting for the problems in the traditional financial system to become obvious to everyone. They're positioning themselves now for what they see coming. Do you think the Federal Reserve is secretly happy about Tether's Bitcoin strategy, or are they desperately trying to find a way to stop it? Let me know your thoughts in the comments below. I read every single one. And if you found this breakdown of how Bitcoin could hit $10 million fascinating, you need to watch our last video about Tether's massive Bitcoin accumulation strategy. I revealed exactly how they're making over $1 billion in profit every quarter and converting it all to Bitcoin using the government's own debt system. The connection between the failing bond market we discussed today and Tether's Bitcoin purchases is becoming clearer every day. Click the video on your screen now to understand why this could be the perfect storm for Bitcoin adoption. And if you want to stay ahead of these crucial developments in the future of money, make sure to subscribe to the channel where we break down these important stories every week. Stay humble, stack sats.